for stock of the day, which is lifestyle communities, because Goldman Sachs has conducted an in-depth bottom-up analysis of the company and says that it's increasingly confident that the company can accelerate settlements, earnings, and cash flows. It expects gearing to fall by 42% in FY25, 35% in FY26, and an upgrade to FY26 earnings by 22%. So it's lifted the price target to $25.25, and it's now rated a buy and on the broker's conviction list, and it is one of the best performers today so far. So guys, I know it's a little bit left field, perhaps, but it's got some interesting thematics, I think. It's got demographics, it's got property exposure, and other tailwinds. Admittedly, though, headwinds as well. Yeah. So, Mathan, how do you weigh up the pros and cons?
Yeah, look, I mean, you start with how good is the business model. It's a very good business model. A lot of people have it's not a surprise model. I think most people know about it. Has performed well, and it ticks a lot of boxes, as you said, with the demographic and where we are in the rental market and the property cycle and so forth. But yeah, look, it's at the end of the day, it's asset value related, and of all the information that I'm getting from the banks are cutting a lot of costs, letting go of a lot of people, so they're seeing a tougher cycle coming in, and I think the rates after the last update from the US Fed higher for longer, and that's what the market is worried about, and that'll flow through to asset prices. Property sector pulled back a lot originally when we had the bear market start off, so did retail, but then they bounced back. So they're in the middle ground. I don't think they're cheap, I don't think they're expensive. I think they're fairly priced for the risk in the market. This is probably one of the better ones, but look, I mean, if you look at the numbers, it looks expensive. The yield looks too big on historical terms. Is that be sustained? Probably not. I think things will slow down, but it's a solid business, and I think it holds up relatively well. I think it depends on what you're buying it for. If you're buying it for the yield thematic, as long as you understand that the future yields will be lower, I think it's okay. I think it holds up relatively well, and I think the thematic holds up relatively well for them. So I'm okay with that for the yield thematic, but I'm just a bit wary on the sector, so we're staying out of it. There are a few good players in that sector, and this is one of them. So I'm comfortable if you're there for the yield play, but for me, I'm looking at total return in this market, and there's a fair amount of risk in the market. The upside is not really there for me for the potential market risk. So I'm not there for that reason, but if you're there for the yield thematic, I think it's okay.
Risk versus reward.
I agree and disagree in some respects. I don't think this is a yield stock. This is a business that's really good at recycling capital and deploying it again at good rates of return, and that's probably the secret sauce of the company, is that it continues to own the land but sells the dwelling. So when the purchaser buys the plot of land, the property, they're not buying the land, they're leasing the land, and they're buying the dwelling. And so once they make a sale, you get a kind of a capital return of the dwelling, but then you get a constant annuity stream of revenue from the rental income that builds. And so the more they can recycle their capital, the larger their network of rental income, the role of rental income starts to build. So there is a good underlying business here. It's incredibly complex in terms of accounting. So if you were just looking at the numbers, I think you'd miss that this is a high quality business. I really like management here. I think they do a good job of explaining a complicated business. And when there's opportunities to mask and to confuse, they always choose not to confuse and to be transparent.
Yeah.
And I think that's really important in a complicated business like this. A decent degree of insider ownership. You sort of mentioned it before, Nadine, there are a couple of headwinds for the business, which I'm surprised have not been clocked in the share price, because it's continued to tick up quite nicely. One is it is heavily reliant on property market, but not the way you think, because most people who buy here are actually selling city properties and then buying one of these land lease, downsizing. Yeah, that's right. And they're often people on low socioeconomic incomes, often people who have a low value property and also on some sort of government support. It's more than half their client base. So a hit to property values, makes a big hit on the affordability of their customer base to actually afford the dwelling in the first place. So it's something that could potentially slow things down for them. Hasn't so far, because we haven't had a property slowdown, which I think has shocked a lot of people. I'm going to keep this as a hold. I think it looks a little bit expensive, but I've said that for a while, and I think sometimes for these high quality businesses, and I do think the trick about this one is to recognize it is a high quality business. You can pay up for these. I'm going to go a hold, but I think with more work, one should be comfortable buying it at this price.
Okay.
It's the long-term players, because if you look at the substantial shareholders, Aussie Super, Challenger, Vanguard, State Street, so there's big boys there for the long term. They're willing to sit through the cycle.
That's the right shareholder base.
So you can see they're not specky buyers, they're there for the long-term players. So that's why you can't, because of the quality of the model, it's not a sell, but we know what the headwinds are. It'll probably take a while. That's the problem. But it is a good business model when the cycle turns.
So perhaps a bit of opportunity cost in being in it, buying it now.
Yeah.
It's an interesting one, isn't it? Because sometimes you have to pay for quality.
You do.
You do. Unfortunately.
Yeah,
That's a lesson
exactly.
you have
And in
to
this kind
learn
of
and
markets,
relearn.
quality is extremely expensive,
Yes,
and that's the
that's
problem.
right.